Welcome to Reverse Mortgage video number 2. We're going to continue to address some of the common questions regarding reverse. The next ones are, how much can you get? And how do you access those funds? Let's start with how much can you get? There is a formula used to calculate the amount of your reverse mortgage proceeds, and it uses two criteria. The first is, how much equity do you have in your home? And the second is, what is the age of the youngest person on title? Now, calculating your equity is pretty simple. The bank will appraise the property and establish current market value. Then they subtract your outstanding loan balance. The difference is your equity. And as I said, pretty straightforward. The second part has to do with life expectancy. Remember in the first video when I talked about the significance of the youngest person on title? At this stage, whether the youngest person is a qualifying or non-qualifying spouse doesn't matter. The lender will use the birth date of the youngest person on title to calculate the amount of funds available. Just a heads up, the younger the borrower, the less money will be available, though presumably for a longer period of time. We'll enter both the appraised value and the age of the youngest person on title into the computer program, and the system will calculate a number we call the principal limit. The principal limit is the benefit of a reverse mortgage. With that, the lender will pay off your existing mortgage and fund the closing costs. After the loan and escrow fees are paid, any excess funds will be set up in an account with the bank. So, how does the homeowner access those funds from the bank? Well, it can be done several ways. One is a lump sum, a single payout which can be used to satisfy an existing debt, like maybe a medical bill or to pay off a car loan, or anything else that you might want to just take a big lump sum. It'll be there for you. Number 2 is a monthly payment, a scheduled monthly payment you can use to supplement your income. This can be very attractive if you include the monthly mortgage payment that you are no longer paying. Add those two together can make a very attractive income increase to your monthly income. Of course, this payment is tied to the total amount of funds available. There is also a 10-year payment option that is not tied to a specific time frame, but allows you to take monthly payments of equal amount for as long as you live in the home. 10-year payments tend to be lesser in amount since the time frame is open-ended. And then lastly, there's a line of credit that's sometimes called the rainy day fund. This is the most versatile distribution it allows you to draw a portion right at closing and then leave the balance available for future use, not unlike a Visa or a MasterCard without monthly payments. And you can also use any variation of those, mix and match them as you see fit. Obviously, all of these options depend on the amount of money available. Now, remember when I said one lump sum could be a beneficial way to access the reverse? If someone lives in the home but is a non-borrowing spouse, there is a workaround available. The primary borrower can draw one lump sum from the reverse and deposit those funds into a local bank or savings account. The funds then become available to anyone who access to those local accounts. It's a unique way for a non-borrowing spouse to access reverse funds, and it is completely legal. Okay, we've discussed how the calculation is available, the principal limit, and how you as the homeowner can use the funds. In the next video, we're going to address the exit plan, how to get out of a reverse mortgage, and what or how the reverse mortgage might affect your estate or your heirs. So grab that last cookie and one more glass of warm milk, and I'll see you on video number 3.